Good day to our dearest viewers. I am Cyrill Santos Jayectin together with my respective group mates Trisha Garcia, Jude Tumampos, Keila Cunan, and our editor Francine Labao. All of us are from STI College Cubao of ABM 301. Today, we are tasked to discuss and to briefly explain about the income statement and the balance sheet of Chan's accounting firm. With that being said, let's get started. Miss Trisha Garcia, please proceed.
Thank you, Cyrill. Now let's proceed to the income statement. First, I want to tell you the definition or what is an income statement. An income statement is a financial statement that shows company's income and expenditures. It also shows whether a company is making profit or loss for a given period. But they also define income statement as one of the three important financial statements used for reporting company's financial performance over a specific accounting period. The income statement focuses on four key items: revenue, expenses, gains, and losses. So since we have the same company for income statement, we will discuss it after the definition of balance sheet. Now may I call on Ms. Keila Cunan to give the meaning or the definition of balance sheet.
Thank you, Miss Trisha. Now let us continue the discussion, and that is the information about balance sheet. The term balance sheet refers to a financial statement that reports a company's assets, liabilities, and shareholder equity at a specific point in time. Balance sheets provide the basis for computing rates of return for investors and evaluating a company's capital structure. In short, the balance sheet is a financial statement that provides a snapshot of what a company owns and owes, as well as the amount invested by shareholders.
Now that you know the definition of income statement, we will proceed to the balance sheet. But we want to let you know first that we will be using the company that we use in our accounting subject. Since we are the one who did that income statement and now we will be making the balance sheet in that company. The balance sheet adheres the following equation with an assets on one side and the liabilities plus owner's equity on the other to balance out. Assets equals liabilities plus owner's equity. Now that you know what is a balance sheet, now may I call on Mr. Jude Tumampos to discuss Chan's accounting firm income statement.
Before we start discussing the income statement, first, let me give the given accounts and their amount value. We have professional fees, salaries expense, utilities expense, representation expense, and lastly, permit and license expense. So first, we have the professional fees, which is what we gain in our company, and we will less those expenses that we have in order to get our net income. So what is net income? Net income is an entity's income minus cost of goods sold, expenses, depreciation and amortization, interest, and taxes for an accounting period. So, we will credit the professional fees with the amount of 495,000, and we will less or debit those expenses. First, salaries expense equals to 30,000, utilities expense equals to 16,000, representation expense equals to 50,000, permits and license is equals to 20,000 with a total of 116,000 expenses. Now, to get our net income, we will less those expenses to our professional fees. 495,000 minus 116,000 is equal to 379,000. And that is how to get the net income and income statement. Now that we are done with the income statement, we will proceed to the balance sheet, which will be held by Mr. Cyrill Jayectin.
Thank you for that explanation, Mr. Jude Tumampos. Now, after discussing the income statement, we will proceed to the balance sheet of Chan's accounting firm. Of course, before we start, we need to identify if these accounts are in the asset, liabilities, or owner's equity section. As for our assets, we have cash, 1,199,000, accounts receivable, 110,000, office supplies, 30,000, prepaid rent, 150,000, and office equipment, 60,000. As for the liabilities, we have notes payable, 200,000, and unearned revenue, 70,000. As for the owner's equity, we have C. Chan Capital, which is 1,279,000. Now, since Trisha already gave us the accounting equation for the balance sheet, that is, assets is equals to liabilities plus owner's equity, we will use this equation to check if this balance sheet is correct. Now, as for our total assets, adding everything from cash up to the office equipment, it will give us 1,549,000. As for our total liabilities, that is 270,000. And our total owner's equity, of course, is 1,279,000. Now, adding the liability and owner's equity, its total would be 1,549,000 as well. Therefore, undoubtedly this balance sheet is correct. Now, after this discussion, may I call on Ms. Trisha Garcia to reach the finale of this video. Thank you.
Now that we reached this endpoint, first of all, I want to thank all of my groupmates for being fully involved and active for this performance task. And thank you for watching this video. I hope you learned a lot about income statement and balance sheet. And thank you again for watching and have a nice day. God bless.